Hey everyone, welcome to our next interview or energy roundtable discussion. As a matter of fact, today we are joined by the anonymous MadManx89. You may know him from his energy commentary and Tesla commentaries on Twitter, as well as Duncan Campbell, who's very well known within the Tesla or within energy Twitter circles. So, gentlemen, thanks so much for coming on the show.
Yeah, it's
Thanks
great to
for
be
having
here.
us.
Yeah, so I've known both of you, have followed you both for a long time, and I think you both tend to know a lot about the energy market, which I think can be very befuddling for your average kind of Tesla investor or just clean energy enthusiast. So maybe if you wouldn't mind starting off with a brief overview, Duncan, maybe start with you, some of the stuff that you're doing with the DER task force, and bearing in mind that most people probably won't know what a DER even is. So I'd love to get a little overview.
Sure. So a DER is a distributed energy resource. Really, all this means is any kind of energy device that's at the edge of the electrical grid. So a home battery, home solar, an EV, even just a traditional backup generator, a smart thermostat, all these things that can interact with the grid. Yeah, and I help organize this community called the DER Task Force, which is trying to advance use of these solutions to benefit the grid, both the owner of that device, but then everybody as well. They're really essential to the energy transition. So we do policy work, we do professional education work. We're actually throwing a big summit in Brooklyn in a couple of weeks that like a lead policy manager for Tesla working on VPPs in Texas is going to be joining us for. So all sorts of stuff like that. And then that's just sort of my after hours job. My day job is I work for a company called Scale Microgrid Solutions. So we are an infrastructure developer building on-site power systems for large commercial and industrial power users. So solar, batteries, sometimes even backup generators, microgrid controllers, all this stuff. We offer it as a service, so our customers don't have to buy our systems. They just sign up for the energy that we produce for them. And basically our pitch is the traditional backup generator business is a cost center for you, and we're going to transform that into a profit center for you. So we develop a lot of projects and buy a lot of batteries.
And I've got a lot of questions I want to get into in that, but let's hand it over to MadManx for a second, who's certainly remaining anonymous here. But what can you share about your background or professional expertise, MadManx?
So my first job out of grad school was working for a municipal utility as an analyst. So a small municipal utility where I was basically the only analyst. So we did everything from investing in a peaker plant to doing grid extensions for industrial customers, some frequency regulation, capacity bidding, and PJM. From there, I've kind of moved around at various municipal management roles, including being an analyst for a large county on their sustainability efforts. So doing fleet purchasing. They had a net zero goal. So we went through all the entire energy usage for the county and looked at ways of cutting emissions. And now I'm kind of Peter principled up to a management role. So I was acting CEO, now I'm assistant CEO, which is village manager, but it's basically a CEO of a small municipality currently.
And how did you get involved in Tesla? Because I think you've been, very vocal. You've had some really great threads on, the economic potential of, the Tesla Semi, for example. And there's certainly some energy overlaps with that part of the business. But what got you interested in Tesla as a company and an investment?
I've been a follower of the clean tech space since, I don't know, maybe a decade or more, looking at different various investments for personal use. Also just kind of looking at energy trends for my various analyst roles. Tesla in particular obviously has stood out. I think I became an investor in, I think, 2008. So I got pretty lucky with timing, I think, or 2019. I think that summer of 2019 when they missed their estimates for Q1. So that's kind of driven at my own personal investments, has driven my interest in Tesla, I would say, along with just how innovative the company is, how interesting it is in the space.
Yeah, I think we can certainly relate to that. So Duncan, one of the things that you were talking about at the beginning was, how distributed energy resources are really assets at the edge of the grid. And I think the average kind of viewer or someone who's not following the space may not know what a big change that is from like the traditional utility model, which was kind of like centralized generation that's like quite large, huge, sometimes 100 plus megawatt machines up to a gigawatt or more in some cases, and just transporting that electricity over very large distances to the load center, so where people are actually consuming the electricity. Can you explain a little bit about like why is there this huge trend right now towards distributed energy and kind of getting the generation closer to the actual electric load?
Sure, sure. And I think you set up the prompt exactly right, right? Historically, you have a power plant 100 miles away. It's very, very large. Through sort of a one-way network of wires, it serves a large swath of people. And the reason we did this were economies of scale, right? It got cheaper and cheaper per unit to build the power plant, the bigger we did it, right? So when we think about distributed energy, which is at the edge of the network and distributed amongst all the users, why are we doing that, right? And the first axiom that led to large-scale centralized generation still holds true, right? The unit cost of building power plants still gets cheaper the bigger they get, even in solar, right? A big 500 megawatt solar plant per unit per watt is cheaper than a 50 megawatt or 50 kilowatt plant, right? So it must be some other value that distributed energy is providing beyond just its raw cost. And the two things it does is, one, it reduces the cost and need for those wires. It doesn't eliminate it, but it does reduce it, which benefits everyone, not just the end user. So you can call this avoided transmission and distribution, is what people will often call this. And two, it offers reliability value, right? Power generally is lost because of a problem with the wires, with the distribution network is that which fails. So the only way to prevent those failures is to generate power at the edges of the network. If you generate upstream, you can't prevent it, right? And so that reliability value is also increasingly driving purchase decisions for distributed energy. So it's those two things, reducing the transmission and distribution cost and reliability. And I'll just quickly add a little note here. That transmission and distribution cost, the way your electricity bill works is actually very, very complicated, bafflingly so. But if you had to boil it down for a lot of people in the US, transmission and distribution, the network, the delivery of the power is about half the bill. So this isn't just like a little adder on top of things. This is a really meaningful part of the economics of electricity. And so as distributed energy systems get better and cheaper, the opportunity to drive down those costs, becomes more realized.
Yeah, and this is something I really want to, kind of, double underline and make sure people are hearing, because to me, it's like this, it's like this huge mega trend that very few people seem to understand, even within the energy space that I've spoken to. But I mean, you're right. You said the thing about the energy generation is going to be cheaper if you can do it large and at scale. And if you're thinking about a residential customer, like rooftop solar is going to be the most expensive type of solar. So it's on the surface, it doesn't make sense to to incur that high relative cost for energy generation. But if you're avoiding half of the cost of the delivered power, because really for a customer what matters is the delivered cost of power, not the Lazard like theoretical levelized cost of energy that gets bandied about a lot, or whatever utilities might put in their rate cases. So it really is important to include the infrastructure costs. And then the other kind of trend, so you've got generation costs for solar in particular are coming down. I mean, the capital cost, the cost per kilowatt is been just on a steady decrease for the last 2 decades or so. And then the other thing, which I think is probably acting to make the economics even better, is that the kind of utility monopoly business model kind of incentivizes spending capital and increasing rates over time, because the only way that they can actually generate a net income is not by selling more electricity. It's actually by putting more steel in the ground and investing in property, plant, and equipment. So that creates kind of a forcing function for rates to just steadily increase over time in an environment where the distributed costs of generation are actually decreasing. So to me, it's a really unique time in the market where there's kind of like this slow motion disruption happening. So I'm curious if MadManx, do you have any kind of thoughts on the dynamic that I've just laid out? And one, would you agree with it? And two, how big of an opportunity do you see?
Yeah, I totally agree. Because of how utility business models work, I think they're kind of an inherently political organization where they're heavily regulated by the state. Sometimes there's other regulatory bodies that weigh in on their ability to invest in capital, rate-based things. So ultimately, I think if there's going to be a driver to make utilities do things, it's going to come from a political basis. So you see that with like Gavin Newsom in California, and you're starting to see that in Texas, where the politicians get involved, and these rolling blackouts, brownouts are not acceptable to them, not acceptable to the constituents. So they're going to drive it with mandates. They're going to force these utilities to change, and they're going to do it by kind of holding the strings on their pocketbooks and making them actually engage in these. So utilities are actually one of the rare places where the political wheels spin faster than the utility wheels. That's how slow these places move. So I think that's probably the opportunity. You're seeing that with the IRA. You're seeing more of a focus from the political parties on these issues. So I think that's where you're going to kind of see the movement for these utility businesses.
Something to add there that I think frames this momentum in an interesting way is, so if we're saying increasingly where energy demand is, we are going to cite energy production and storage and shifting of loads and all this stuff to reduce or avoid the cost of wires and reliability issues. That can be true in the other direction as well, where existing large power plants exist. I believe increasingly we will see industrial load attempt to site co-located with that large power, for the same exact reason, to avoid the cost and reliability issues associated with the wires. Just on the other side, right? Distributed energy goes both ways, right? So you're seeing like very early stages with like cryptocurrency, things like that. But industrial chemicals, manufacturing, I think there's a very strong likelihood all of this stuff will try to start siting new operations at large scale renewable energy power plants where you can procure energy very cheaply, cheaper than a typical retail delivered rate. And then for the project, it's good because they could sell it more at a higher price than the typical wholesale rate. So the same dynamic will ring true.
I think you'll also see that they start to locate storage with those kind of facilities as well to maximize interconnection. I think what we're seeing with this transition is internet connections are basically like gold right now for renewable projects. That's the constraint for deploying right now. So now you have the IRA basically incentivizing standalone storage up to 50% of the cost. So I think you're going to see a massive deployment of storage at renewable generation facilities as well, just to maximize their interconnections. So they'll oversize their plants and then add storage.
Yeah, and so maybe for those who are not as familiar with how time-consuming and expensive interconnection requests are, could you maybe just give an overview of why that's such a big constraint and kind of what the process is?
So it's really, really hard to build things in the United States, especially transmission. There's a huge public community input process. You have to negotiate with all the landowners, et cetera, to build these wires.
And a lot of people don't want them. There's this whole like NIMBYism, a trend. It was a huge issue when I was working in wind. Not in my backyard is the NIMBY acronym. So people love solar and wind, just not if they have to deal with it. Even if you're paying them, it's just the siting of these projects is just a nightmare in a lot of cases.
It can take like 10 years or something to get a new transmission line approved. So when we're talking about transitioning the energy system from 20% renewable to 50+% renewable in the next decade, you're going to have to figure out how to build wires faster or do distributed energy resources like Duncan is doing to kind of avoid the transmission issue.
Yeah, so Duncan, the another point you brought up, which to me it seems like kind of the holy grail, is not only citing your your generation by your load, but also citing your load with your generation. So those might seem like the same thing, but like if you think about just from a residential customer's point of view, and this is something Tesla has talked about, you can have a solar generation on your roof. You can have a battery to kind of manage load, and then you've got the use of the electricity, which is the Tesla is the main kind of electric user, at least within the current product portfolio. And then at the same time, they've talked about doing HVAC down the road. And right now, it's such a disaster to try to like optimize each one of those, because the existing utility kind of like business model doesn't have mechanisms to pay you for the actual value that having both flexible load and behind the meter generation. Like it's very hard to make these payments in any sort of like fashion that actually recognizes the value that they're providing to the grid. But it seems like so obvious that that's the way to go. You have very smart use of both your generation, and then you can cycle your load and be more reactive to market prices at kind of like the discrete user basis. It's not the sort of thing that most people are willing to manage. I mean, there's been a lot of studies of like people's behavior if they've got more information about their energy usage, and for the most part, like they just don't care. So like this sort of thing needs to be automated with software in my mind, and there needs to be some sort of payment mechanisms to allow the grid operators or the utilities, whoever's in charge of the local grid, to like pay for the value that you're creating by having flexible load and behind the meter generation. But it strikes me as a huge challenge. So I'm kind of wondering, what have you seen in your, the various geographies that you've looked in and trying to, scale microgrids and do all the different things that you've been doing on DERs?
Yeah, definitely. So I think one thing that's interesting is for commercial and industrial energy users, a lot of these mechanisms do exist. They might not be elegant, but they do exist. There's ways to do this. And a lot of that, the hardware and software that can orchestrate all of this exists. Also, maybe not super cost effective yet, but it's out there. And so, we have projects, whether they're in Pennsylvania or California, that are the microgrid, so the solar, the battery, et cetera, is not only continuously optimizing the end user's energy spend by charging and discharging the battery, not just based on some preset time of use rates, like this is this much and this is this much, but actually with the hourly energy markets ramping up and down and arbitraging on behalf of them. It's then also offering services to the grid, to the grid operator for certain sort of mechanisms that don't really show up on your bill in an elegant way, things like frequency regulation or synchronous reserves, these really fine-tuned, like down to the second level decisions. So that stuff exists where the pie is big enough, right? Commercial and industrial, big chunky loads. It's worth like spending all these extra engineering hours to get it all right. It's coming to residential though. We're not there yet, but it's on the way. We just need more scalable sort of autonomous products, because you can't put those extra engineering hours in every project. But it's on the way. And I think what you need is two things. One you mentioned, which is software. It needs to be automated. You can't, the residential energy user can't have like a little screen in their kitchen showing energy prices and they're making decisions.
Trying to save 70 cents for like shifting the load of a dishwasher cycle doesn't make a lot of sense. Most people are not going to care.
Never going to make sense. Yeah. Should I like cook turkey tonight or like something? It's just like never going to happen, right? The second thing you need though is like an elegant and simple business structure, that sort of wraps all this up, right? Because the mechanisms by which you produce value for the energy system are very, very complicated. So even if it's automated, like the way the risk and reward works and like how you get paid out and stuff really needs to be simplified. And I think where we're headed is firms who are going to take all of your load flexibility, your storage, your solar, et cetera, package up their capabilities and just offer you an energy rate that's cheaper than you could ever get in any other way. So not really exposing you to the performance and the market fluctuations and all this stuff, just giving you energy as a service, making it really, really easy to just say, oh, one offers 10 cents a kilowatt hour. This offers 8 cents a kilowatt hour. I don't have to think about the rest. I think that's kind of like where this goes. And yeah, any company who's positioned to control those assets, I think, is then therefore has a really attractive place in the power markets.
Hey, Duncan, I live in California, and I know PG&E did some kind of experimental virtual power plant stuff with Tesla recently, which many, Powerwall owners in California signed up for on the app, and it made it seamless, and they received some kind of credits from PG&E. I'm not sure Tesla made much money on it yet. This is sort of experimental, but it seems like a step in the right direction, at least. And I heard ERCOT in Texas is doing something similar, planning to do something similar, maybe with Tesla. Which utility companies do you think are at the forefront of this? Going into the future of where we could be headed, for distributed energy and virtual power plants. Is there any in the U.S. that you think like? There's a few in the country, right? I don't know what they all are by name, but is there any particular ones you think are at the forefront?
This might be contentious, and there are good arguments for other positions on this. But I would hope utilities are involved as little as possible. This is about integrating with the markets at the ISO level, right?
Okay.
For the utility to be the in-between, I think inherently is going to sort of slow the velocity of this stuff.
What does ISO stand for, by the way?
Sorry, Independent System Operator. So, right?
Okay.
Yeah, California is one big grid. It's called CAISO, California ISO. Okay. And basically a nonprofit corporation operates the grid. Then there's a bunch of utilities within California, PG&E, SC&E, LADWP, all these utilities, right? And they basically deal with the local distribution wires and customers, right? So if a bunch of power walls are going to help the grid not fail due to some like under capacity sort of event, it's really their integration with the ISO that matters. For some reason in California, a lot of the times the utility in between's that, which is, I think, a weird ramification of like sort of the fallout with Enron and like the way deregulation played out in California, which was kind of bizarre. But like if you go to any other of the organized, liberalized markets, PJM, which is sort of like the mid-Atlantic, New England ISO, which is New England, New York ISO, which is New York, you basically have aggregators who work directly with the market, and then the market can just offer them price signals, which are the same price signals big power plants get, right? And it's more elegant, I would say. The only place where, and there's a lot of value here, where I think the utility is inherently sort of your counterparty as the VPP, is for helping reduce distribution costs, right? Where it's not about the like energy supply and demand balance at the big aggregate level. It's about saying like this substation's got a problem. It's constantly being nearly overloaded. We're going to contract with Tesla or Sunrun or some aggregator of VPP to discharge their batteries at the right time to help this little specific part of the grid, and we're going to give them money for that. That's where I think the utility matters, and I think the California utilities are in a good place for that and doing pretty well. I think the New York State utilities as well. I mean, it really comes down to where the state regulators are pushing the ball, because that's who utilities listen to,
Yeah. So Duncan, I'm really glad you brought up this point about the utilities, because I think a lot of people don't realize that there are all these other players kind of behind the scenes, which in many ways are kind of more important. But in your example of kind of lowering the household rate under this ideal kind of software plus hardware DER format from like 9 cents to 7 cents. In a lot of places, like where I am in Michigan, it would actually be illegal for somebody else to come in here and offer me that rate. So even if somebody had all the technical chops and figured out the business and took the risk to do it, they're not allowed to. There is a cap. There's like a 10% cap, but it's already fully subscribed. And so, that seems like it's one of the hurdles. And for utilities to step in and fill that role and say, okay, I can lower your rate from 9 cents to 7 cents. Well, even if there is a cost savings, they don't make any earnings on that. So they have to pass back all the savings, back to all the customers in the form of lower rates. So there really is no incentive. There's in fact the opposite incentive of saying, oh, I can solve this problem by, oh, you want distributed energy resources? I'll go buy a bunch of batteries and put them at all my substations to alleviate that problem that you were talking about, Duncan, because then I can earn a return on the investment in those batteries that I've made, instead of just paying a third party person to solve that for me, even if it's at a better rate and there's cost savings. It's just a pass through, so I don't bear those costs. Whereas if I solve that problem myself with my own capital, then I get to earn money on it. So it's a very there's some strange incentives at work, which make the optimal solution not the right one in many situations.
Yeah, I totally agree with that, and I think we're going to see a lot of interesting things play out, because about half the country never liberalized, right? So half the country has the old school vertically integrated utility that owns the power plants and the wires, offers you your rate, or doesn't offer you, just gives you whatever rate you get. There's no choice in the whole thing. And there's some people who still believe in that. So when it comes to distributed energy, they think the same paradigm will exist. It's the utilities who will control this stuff. They'll come up with the new rates, bear the risk, et cetera. Sort of, it's a central planning approach. We'll see if that works. I obviously, kind of given the choices I've made, I don't believe that. And I think it's actually quite dangerous because the tricky part of this is figuring out what customers want, right? You can do all the techno-economics, figure out the math. Hey, if we do all this with these batteries, like here's the new effective cost of electricity. But like, what are customers going to sign up for? What's a good experience? Like, what will they understand? You need a lot of people out in the market figuring that out, I think, to actually get there. So I think, California's in an interesting place because you have an energy market, but you don't have retail choice, like being able to sign up for power, other than through community choice aggregators, which is a whole other thing. I think Texas is probably going to do pretty well here. And I think New York, New England, and PJM will be, quickly behind.
The problem you have
go ahead,
the problem you have for these kind of third-party suppliers, retail choice, is force majeure events. I mean, you saw in Texas, all these third-party suppliers got completely wiped out. You're seeing it throughout Europe, where a lot of these kind of agreements, when the natural gas spikes, when something happens where there's a grid fault, maybe what's happening in France where half their nuclear power plants are down. A lot of weird stuff happens in energy markets, and there's just no way to build an insurance for your company to kind of absorb that risk. So to kind of circle back to where Tesla is, they, I think, recently filed to become a third-party supplier in Texas. We haven't seen them kind of roll out what they're thinking there, but it would be kind of a risky proposition for someone like Tesla, who has a nice balance sheet, to kind of engage in this this practice. So that would be the one risk I would have there. And then Duncan was kind of getting to it too. Just customer acquisition is the big challenge. So you have to be able to explain this to retail users. Maybe Tesla has some trust there. They could roll it out in their app, say, hey, sign up for this. But ultimately, that's always the hurdle with anything where you're selling to a residential customer or a small commercial customer. The big industrial players kind of know what they're doing. There's enough financial incentive there, but everybody else needs a sales team to sit down and explain the product to them. So when you're you're dealing with pretty thin margins already, so that's going to be the biggest hurdle.
Yeah, it absolutely is. And, thinking about Tesla, I think one of the big advantages they have is, their customer acquisition costs. Like if you compare them to a Sunrun or First Solar, they can actually deploy these a lot cheaper because they're not spending on advertising because they've got that brand recognition. So it seems that like they've got the advantage of a large scale of, distributed energy resources. And it's just going to make sense with that much scale that they're going to want to aggregate these. But then they're going to run into a host of issues, as far as I can tell, because they may have a great solution for like what they're doing in California. But one, they're not getting paid for that right now. So there's like, they need to figure out how to take a slice of the pie for themselves. And then, let's say that they do something great in Texas, with the grid there, and they aggregate and they can actually get access to the wholesale market. Well, that's not a scalable solution because it'll only scale within that ISO. And so they're going to need experts, like a lot of O&M costs, who are talking with these grid operators and who are talking with the utilities and the state regulators, the PUCs, which is the public utility commissions. Those are the regulators. And so it's just, we think about Tesla scaling and having operating leverage a lot just on the automotive side of the business, and I think it's going to be a struggle for them to try to do the same sort of thing on the energy side, at least with these DERs. I think that there's other topics we'll get into in a minute that are maybe a little bit more interesting in the scaling potential, but this is one where I just think that the slowness of the processes and just how the fact that you're dealing with so many different regulators, even within the United States, it makes it rough.
With the utilities too, they'll string you along for a decade with pilot projects. Their Duke is famous for this, where they've done different pilot projects, and then they come back and they increase the size of the pilot project 50% after 5 years. So when you're starting at 50 megawatts or something for some of these virtual power plants, the regulators can string you along for 2 decades before you get to any sort of scale that's interesting.
Wow.
Yeah. So I want to shift gears a little bit and talk about the Inflation Reduction Act. There's a lot of incentives for the energy side of the business in there, and I know both of you are aware of some of those. But maybe MadManx, would you mind giving kind of an overview of some of the things that you find most interesting as you've been kind of diving into that, and specifically as it relates to the implications for Tesla?
So there's kind of 2 big pots of money. There's the new manufacturing credits, so they can get up to $45 a kilowatt hour for battery cells. I looked at inverters too. Looks like for a power wall, they'd get about $600 for each power wall and inverter credits if those are manufactured, which I believe they are manufactured, and I think they're in New York. So you get kind of that money. Additionally, energy storage was added to the investment tax credit. So it's now eligible for between 30% and 50% tax credit, depending on certain criteria, local sourcing, location of the battery install. So if it's in an area that has low employment or was a former energy community, you're eligible for some bonus tax credit there. So that's probably the biggest things when it comes to energy storage, is now they'll be getting a tax credit. My understanding is Panasonic, as part of their contract with Tesla, has a pass-through. So any tax credits will be passed through directly to Tesla. So you're going to see a pretty big jump Q1, I would think, when all these credits, especially the manufacturing ones, start going through.
And Duncan, I'm curious if you have any thoughts either on Tesla specifically or just the broader business for incentivizing. I mean, to me, it seems like a real catalyst for scaling deployment, which has been, I think, badly needed.
Yeah. So yeah, I'm in the business of deploying projects. So I can't claim to be super informed on the sort of like manufacturing side of the tax credits. But insofar as like the investment tax credit goes for projects, I mean, it's simple, but the big win here is the tax credit for standalone battery storage systems. It used to be that you have to sort of convince the IRS that the batteries are part of the solar system, and therefore you get the solar tax credit. And there's confusion about that. Now you just get it, and it's 30% up from 26%, and it's locked in for however long, like a decade or whatever, possibly even more than that. So that's just that's a huge tailwind for battery storage deployment. I can tell you the market, insofar like the project finance market, who's underwriting these deals to build projects, while excited about a bunch of the other provisions of the IRA, is waiting for further guidance from the IRS. Mm-hmm. So things like domestic content sourcing, like the stuff you need with like labor unions and apprenticeship programs, like all this stuff. People are very excited about it and like ready to start building it into their models, but don't yet know how to, and are waiting for IRS guidance. So for the moment, that stuff isn't really being integrated, which, if you're an investor looking for things that aren't priced in yet, maybe it's a good time to think about that. But that's kind of where we are on that stuff. But yeah, it's huge. I think it's hugely accretive for anyone manufacturing batteries. I mean, certainly Tesla included.
Yeah, I get the impression a lot of people don't understand how significant this is. I mean, it's like it's a huge boon, I think, to making these projects pencil. And I can just say, based on a lot of the I would always, my kind of role at my old company, at least one of my roles, was to kind of evaluate new projects like this that we'd be doing. And so we wanted to get involved in a battery project. And so we were, trying to run the numbers. Okay, where would it make the most sense to site the battery? Well, we couldn't really base it based on what specific power plant that within our fleet had the most need for a battery, because you had to prove that it was going to be charged by renewable energy in order to qualify for the tax credit. So I think if you get rid of that, as well as kind of renewing the length of the tax credit, it's going to make battery economics a lot more attractive. And just from my own experience looking at these before, they're typically not as financially attractive as I think a lot of people kind of presume they are. It's like, oh, you can just arbitrage like the high and the low price. It's like, yeah, but that doesn't make nearly as much money as people think. It's like you really do need to kind of value stack and add additional layers of revenue on top of there. And it's a tighter market to make these battery assets really pencil than most people realize.
And it's risky as well. Like infrastructure investors, like what they refer to as contracted revenue, right? And arbitrage revenues are sort of merchant revenues usually, meaning just sort of it's what the market happens to deliver. There's some optimal mix of those things, but yeah, I agree. People do tend to kind of like paper over the difficulty of making these projects pencil. One other thing I want to throw out there that I think is a huge sort of dark horse for the IRA. We don't know how this is going to land yet, like how the IRS is going to treat this, but investment tax credit transferability is a big deal potentially, right? So historically, right, if you buy solar or storage or whatever, you get this investment tax credit. Well, what happens if you don't have any taxable income, right? Maybe it's because you're building a project within an SPV that doesn't have any income yet and therefore has no use of tax credits. Or maybe you're a nonprofit, or maybe you're the government buying these projects. Like there's all sorts of situations where you just don't have enough taxable income to actually use the tax credit.
And if I could just interject there, a lot of utilities can't even use these just because they have accelerated depreciation on their capital spending each year. So even though they've got a large amount of income, they still can't pay any taxes just because of accelerated depreciation. So there's a large class of potential users who can't access these credits.
So potentially this IRS or investment tax credit transferability, which is basically going to allow one at a high level to sell the tax credit to someone else to transfer it, but obviously that would come with some exchange of value. In theory, means this should apply to more folks and kind of provide liquidity to this market. Now, there's a lot of questions about how that will work. There's legal things, there's recapture, there's risks that are like a lot of questions, right? Not to say this is easy, but if it can all be figured out, I think it shakes things up quite a bit, because right now the way you deal with this problem is you bring in an outside tax equity investor who's different than your other investors, who has a big tax appetite, but takes a lot of the value.
They take a huge amount of the value.
There's very few of them. It's a very sort of concentrated market. And it's just like enormously complicated to transact with them. Transferability could be really interesting for this space, especially for smaller projects for which bringing in tax equity investors is sort of administratively cumbersome and costly.
Yeah, I mean, the legal fees with that is prohibitive in a lot of situations. And you're right, it's like the headache of understanding the partnership flip structure of tax equity. It's like it's a nightmare. It really is a horrible structure that's just been born out of like, how can we get around the restrictions on not being able to transfer these tax credits? So that would be a huge boon if it pans out the way that you're saying. Yeah, MadManx, go ahead.
You're also getting direct pay for municipalities and federal taxpayers. So a lot of the grid, like Tennessee Valley Authority, is owned by the feds. So there's a potential there for them. They own some of the generation assets. And then there's a ton of municipal utilities that own, a coal power plant or something along those lines, where now all of a sudden they could build a solar plant on some municipal land, or, contract with a local wind farm that just was completely closed off to them before, or they would have to go through some sort of PPA where, they bring in a tax equity investor and another investor, and enormously complicated. Now they can just issue an RFP, build a solar plant. I mean, it's a huge boon for them.
Yeah.
Yeah.
Hey, MadManx, I wanted to ask you a question just on a tangent here. I know you've had some great Twitter threads on like the Tesla Semi, and it made me think of this is, um, it seems like given all of the talk about the storage and battery storage, I mean, I have 3 Teslas in my driveway right now. We just got a new Model X, and we're waiting to sell our old one, so it's still in there. But they all have like full batteries, dormant 95% of the time, 8,500 kilowatt battery size. It's enormous energy just stored there doing nothing. I mean, they're not robo taxis yet, so there's all these cars. I mean, the Tesla Semi, maybe it's not a case with semi trucks are going to be driven so much more often than just a regular car, but maybe the Cybertruck could have vehicle to grid charging. I mean, what are your thoughts on the vehicle to grid? Do you think Tesla could put that in place? I mean, that would seem to accelerate the potential for the utility of energy storage, by using it through the vehicles, right? I mean, what's stopping Tesla, or what are your thoughts on that? Do you think that the Cybertruck will have vehicle to grid capabilities? I mean, what do you think about that, MadManx?
I think it's highly likely the Cybertruck could have it. I don't know if they'll have sort of so what you need both like an inverter on the vehicle that is reversible, and then you need some sort of adjustment to your power panel to take in that power into your home. So I think Sunrun and Ford are working together. I think GM has a partner too for their pickup trucks, where they're going to basically install this kind of portal in your house that can take the power in, gets sent into your panel. The cost of that I think is like $4,000 or $5,000, so it's not that expensive. So it's cheaper than a generator or something. Certainly a whole home generator. So I think there's a potential there. I don't know that it'll be, maybe these pilot kind of virtual power plant project programs, maybe you could do some sort of selling or arbitrage with the vehicle battery, but my guess it would be mostly, grid outage scenarios where, you just want to be able to run your fridge, run your stove. It's not that much more. You have these giant batteries. I think you could, in your example, I think you could probably run for a week or more just on your cars. So
yeah,
I think that's the solution. I think it's a marketing thing too for like Ford or GM. So it would be a marketing thing for Cybertruck as well. When they do surveys on this, people love the idea. So I think, I don't know it's going to be necessarily a useful grid asset. I think that's more of a stretch, or monetizable grid asset even, but for emergency backup.
It hasn't really taken off. It reminds me, I remember Nissan Leaf, the original commercials showed like the Nissan Leaf or the Chevy Bolt. Like this was like 7 or 8 years ago, powering the house. That never took off. It's like battery swapping. It sounds like a good idea, but for practical reasons, it doesn't work out on scaling to the masses, So I wonder if there's something, with the vehicle to grid that maybe you guys can see where it's just not practical to do for the masses, like it's nice for marketing, like you said, but it's just not going to realistically happen. But I would be great if it did. That seems like.
Yeah, so I mean, I would just say if you're talking about like, I think there's maybe 2 different things you were talking about there, Emmett. One would be like home backup generation, and that's just kind of like a customer will pay for that convenience and would maybe like the option to do that.
There's like the Powerwall, but the Powerwall can be part of the distributed energy or the VPP as well, right?
But then there's this concept of vehicle to grid, where you could actually take that 100 kilowatt hours that you've got stored in your battery and actually push that externally away from your house. The economics of that are not super great in most cases. I've done some numbers on it, and I think I wish I could remember the figures off the top of my head, but it's like you get. I'm ballparking here, but it was something like $40 a year or something like that. Now it'll depend a lot on like if you're in this California VPP program and you can sign up for that. Well, the economic potential of that would actually be a lot larger for you.
I wonder if Tesla will have a fleet of autonomous Cybertrucks they control that just autonomously drive to the part of the country that needs it the most to participate in this like massive vehicle to grid deployment with the help of the Cybertruck batteries or something. It'd be kind of interesting.
My sense is the economics aren't so great, but go ahead, Duncan.
I'd say one way to kind of segment this further, right? So you have, I call it vehicle to home, which is the sort of backup thing. There's also a different version of vehicle to home, though, which is discharging into the home while still grid connected, not for the purpose of exporting power and getting paid like wholesale energy rates, purpose of optimizing your energy bill, just like a power wall might, right? So sort of grid parallel vehicle to home. And I definitely think that's possible. You also have the other middle ground, which is just smart charging, right? Which is, your Tesla's plugged in all night, power prices go up and down all night. It needs to be charged by 8 a.m. Let the computer figure out the best time. So I'd say there's like a continuum of V to G options. The furthest end of that continuum being exporting power to the grid. And there's definitely some challenges there. I do think it'll happen. It's to what extent, to what scale, what applications. Like, people are really looking at like school buses, for example, right? These are batteries on wheels that sit in a parking lot all summer. Like, we should probably be able to find a way to use those, right? But another big complication is manufacturer warranties, right? If it's some company that's going to provide the service that like manages the V2G and all the market participation and stuff, the only way that's really going to get underwritten or like whatever is if the manufacturer of the vehicle says you're allowed to do that, and here's how much you're allowed to do that without violating your vehicle's warranty. Because short of that, it's never going to be worth it. You don't want to like put your vehicle at risk just to like earn some extra beer money from the grid, right?
Now, would the Inflation Reduction Act give you like double dipping credits, one for like having an electric vehicle, one for having storage, if you had a vehicle to grid car? No.
Well, I'm not an expert, but I don't think so. I
Probably
think
not. It'd be quite an incentive to make it happen if they did, though.
I think you're either stationary storage or an EV.
If you were both, it'd be pretty. I mean, my car 90% of the time could be stationary storage. 10% of the time I'm driving it.
Take the wheels off.
The wheels off. Put it on some blocks. Then you can do it.
Stranger things in the tax law have happened, though. So I mean, somebody could find a way to do it.
That would be like that'd be incredible. It'd be like an incredible double rebate to get.
I was just reading about the early days of the wind production tax credit, and people were putting up essentially fake wind turbines and harvesting tax credit.
Windmills.
So you never know.
Oh, that's funny. I like the way that you laid that out, Duncan, because I think you're right. It is a continuum, and frankly, there's some low-hanging fruit that technically you could aggregate a lot of these and get some access or some value, whether it's just for the consumer getting some value, or even if like you could even aggregate and potentially get some capacity payments just for having interruptible charging. Like that's a mechanism that you could do today. It would take a little bit of regulatory work to kind of get that figured out, but it's certainly doable and a little bit easier than probably doing discharging and trying to get access to wholesale rates. But I wanted to hit on the Inflation Reduction Act a little bit more with the specifically around like how big of an impact this could be to Tesla. And I know, MadManx, you've done some great work on this, as has Bradford Ferguson. And so I'm just wondering, can you kind of summarize how big of an opportunity you think this is in terms of the kind of size of the pie of the tax credits that Tesla could be having when you factor in the vehicle credits, the stationary storage credits, in the environment where they're really ramping up megapack production as well. Have you done a high level summary of kind of how big that impact would be?
So I think the immediate impact, the stuff we know about, assuming what we found out about Panasonic's agreement with Tesla passes through, you're talking about $500 million or something in Q1, just immediately direct pay manufacturer tax credits. That assumes, Fremont battery hasn't really scaled. So you can probably add in maybe, I don't know, what do we think? A gigawatt hour or something from Fremont in Q1. So that's another 45 million. So you really,
Cato, is that what you're talking about? Cato Road?
Yeah, Cato. So, I mean, when you start looking at Elon projections and look at a terawatt hour, that's $45 billion a year in tax credits, direct pay.
That's ridiculous.
Yeah, so it starts to get absurd numbers. You look at, I mean, the federal government can't afford it, but I don't know if they'll want to. They can get $10 a kilowatt hour for their Lathrop facility. So that's about $400 million a year just from the Megapack facility that they're building in Lathrop. that's going to be 40 gigawatt hours, I guess, is the plan. So you start talking about just ridiculous numbers on the battery side as they scale. Now I think there's 30 or 40,000 for the semi truck. I don't know, is that going to go to customer? Is that going to drop in the bottom line? My guess is for these early reservations, it'll go to customer, but eventually Tesla will increase their pricing, capture that.
Yeah, it would give Tesla more pricing power, and so therefore, access to greater demand pools, probably, right?
Yeah, exactly. And same with the vehicle car credit. I think initially, just because of how Tesla works, their back order, initially most of those credits will go to customers, but by maybe Q4 or something like that, Tesla can adjust their pricing and capture most of that. So, you're talking $7,500 a car, maybe a third of it goes to the customer, $5,000, million cars in the United States. You're talking $5 billion in those credits. So, I mean, these are just huge, huge numbers that are ultimately going to just drop to Tesla's bottom line. There's some question about the transferability of some of the credits, vehicle credits, things like that. But if Tesla can find a way within the corporate minimum taxes, a lot of this stuff is just going to go straight to their bottom line. So it's pretty amazing. I don't know that the Tesla community really captured it or was thinking about it until Bradford started bringing it up, started going on people's podcasts. So that was good that he did that. But these are just giant numbers. The other thing that's out there is DOE is basically going to give you loans for anything you want battery related. So they just announced, I think, $4 or $5 billion more dollars out to GM, to lithium producers, to lithium refiners. I don't know that Tesla will tap that money, but that's ultimately a source of low cost capital for factory deployment. They had a similar thing going in Germany for Giga Berlin, and they ended up turning down the money because they didn't feel like working through the bureaucracy. So I still think that that's a possibility where Tesla doesn't tap those funds, or for political reasons, Elon doesn't like how it looks taking money from the feds in that aspect. So we'll see if they touch that money, but that's out there too, hundreds of billions of dollars potentially in loan capacity from DOE for deploying battery and battery supply chain.
Yeah, and from his perspective, it could be another kind of attack vector, right? So I think there's certainly that kind of political concern. One other wrinkle I just wanted to throw out there is also included in the Inflation Reduction Act is an increase in the corporate minimum tax. So there is potentially an argument to be made that the huge amount of net operating loss carry forwards that Tesla has would preclude it from paying taxes anyways far into the future. And so while this huge amount of direct pay credits and everything like that will certainly help and probably go to the bottom line, that will be offset somewhat, I would suspect, by higher cash paid for taxes starting next year. Is that a fair assessment?
Yeah, I think that there's different ways they can bring some money in Q4 if they decide to. I'm not sure if they'll do that or not. Bringing some corporate cash over from China and potentially Europe. I'm not sure how much they have there. I didn't check the 10Q, but so they could try to capture some of their tax credits in Q4 by reshoring a bunch of money. They could ignore it and lose their kind of deferred tax benefits. So it's kind of an open question. One thing that is noticeable, you are allowed to use these credits. I believe these new credits up to 75% of a credit to that 15% corporate minimum tax. So there's an opportunity to offset some of that corporate minimum tax with these tax credits. There's also an opportunity for accelerated depreciation that still is in there. So any manufacturing equipment, things like that, you're still allowed to count towards the 15% corporate minimum tax, is my understanding. So I'm not a tax attorney, but that is an element that's out there, but it does seem like there's enough loopholes that Tesla will be able to kind of figure it out.
Yeah, and the crazy thing about this whole bill to me was just that it seemed to hit on every aspect of Tesla's business. I mean, we didn't even talk about solar yet, really, but there's the extension of the investment tax credit for solar as well, which will benefit them. So it's kind of crazy what a kind of just boondoggle is probably too strong of a word, but what a boon this will be for Tesla, and just the sheer magnitude of the dollars that we're talking about here is just kind of unfathomable. And you can clearly see Wall Street has not digested it based on the way the stock has moved after this. So I think 2023 is going to be a very interesting year to see, whether these start materializing and kind of if people wake up and kind of open their eyes to how big this is.
Yeah, I think one of the things that, and I was starting to look at kind of what's the total addressable market for some of this energy stuff, virtual power plants, things of that nature. I was actually talking to Jigar Shah, who's the director of the DOE loan program, on Twitter. And he said he thinks, and he sent me a study, it's about 5% of total energy spend is kind of
Wow.
the virtual power plant. So you're talking, maybe 500 billion spent on electricity in the United States, $25 billion potentially. If you're using existing assets like Tesla could potentially do, you could capture, I don't know, 20 or 30% of that. You probably have to share some of it with the customer. There might be some hardware costs, but in Tesla's case, they make money selling the hardware. So that's the other point to kind of keep in mind with Tesla is gross margins on all this equipment and energy stuff they're selling are about to go up quite a bit. Demand is going to go up a lot from the ITC. So you're going to have a huge opportunity to increase margins on this energy generation equipment. And that's really, I think, the opportunity for right now. You can shoot for that 25 billion kind of software as a service, virtual power plant type idea, but really it's going to be selling lots and lots of power walls, selling lots and lots of mega packs and power packs to people like Duncan. That's really going to be Tesla's bread and butter for a long time. While that other kind of opportunity maybe develops, maybe doesn't, maybe develops for certain customers that are residential customers that are willing to take an hourly rate plan and just directly dive head deep into the market and some of these utilities. But I think that's always going to stay pretty limited, and it's going to be kind of a hard nut to crack for Tesla.
Yeah, we had an interesting roundtable discussion with Jordan from the Limiting Factor and another guy, Josh Isblon, and it seems like lithium mining and refining is maybe the limiting factor to really ramp up and scale up as fast as the market potential is for these things. My big, not concern, but to play a little devil's advocate, I try to think of balance. Like, I'm really bullish talking and hearing all this stuff about the Inflation Reduction Act, but I'm still trying to figure out back of the napkin math. Like, what am I, how big of a deal is it? Like, Tesla's a trillion, right now it's like 600 or 700 billion market cap, but it's really like, I think of it as $1 trillion market cap company, and it'll be back there soon enough, I'm sure. But it's a huge company. It's not a $50 billion or $30 billion company anymore. And these are, to move the needle on $1 trillion market cap company, the numbers have to be really big. Like, people talk about Tesla Insurance being this big boondoggle of a business, but then I'm like, well, it's going to make like maybe best case, like it could add like $50 billion of market cap to Tesla's value or something, like maybe 100 billion. I don't know. It doesn't seem like it's going to increase the market cap of Tesla by another trillion or something. So this Inflation Reduction Act, do you think the last question for you, MadManx, do you think, I mean, you've been looking at the numbers and stuff a lot. Do you think what if you had to just guesstimate what's a fair market cap addition to Tesla's market cap before the Inflation Reduction Act that you think, a year or two could be added just because of the Inflation Reduction Act coming into fruition?
On the car side, I think
like the all in, you can add it up in pieces, I guess.
Yeah, car side, maybe 5,000 a car is what we're talking about. So 5,000 per car sold in the United States for the next 10 years would be, I don't know, what are your guys' projections for how many cars they're going to sell in the United States the next 10 years?
Maybe 10 million. That's,
10 million?
10 million per year by after 8 years, let's say, like 20 million is what they're targeting, but I'm not sure they'll make that. Who knows? Just be conservative. 10 million. So between now and then, 20 million in total, let's say. Yeah.
Say how much of that United States, maybe 30% or something. So maybe 3 million cars a year.
Yeah.
Let's give them some room to scale. 20 million cars, $100 billion just from that. Another 4,500 in manufacturing tax credits. So another 100 billion or $90 billion there. So $190 billion over the next 10 years.
Over 10 years.
In cash for them.
Mm-hmm.
The energy storage side, I think, is kind of interesting. I think there's basically unlimited demand for as many batteries as they can build.
Yeah.
I think, there's opportunities for customer sided storage. There's opportunities, like I was talking, for interconnection. Just so you understand kind of the interconnection, I think probably we'll do 10 gigawatts or something of just wind repowering projects, which are just projects where they kind of tear down the wind turbines and build new wind turbines. And those, probably to maximize interconnection, you'd probably want 4 gigawatt hours of batteries with them. So that's 40 gigawatt hours just from wind interconnection repowering projects. So
Mhm.
that's the entirety of their planned capacity for, and that's pretty low value. The stuff Duncan does has much better returns, but
Yeah.
Tesla doesn't care about the returns because they're just selling batteries. So,
Yeah.
you do that, $500 a kilowatt hour, that's $20 billion a year just in battery sales. Maybe they get up to 40-50% gross margins on that for now until the market catches up. So, that's another $10 billion just from Lathrop. So,
They're big numbers. Yeah.
yeah, so $10 billion a year in profit. Maybe that market could scale to 3 or 4 times that amount.
Mm-hmm.
$30 billion a year. You times a 20% 20x multiple on it. I mean,
Yeah.
600 billion.
Pretty substantial. Yeah, it's pretty substantial. And that's, a few years from now. It's not going to happen right away, but a lot to talk about here. We got to have maybe round 2 to talk more about the scaling as they scale up in Q1 and such. But we wanted to ask you guys. We always ask our guests now. Part of our business model or our content model is to donate to charities of our guests' choosings. So, Duncan, if you want to go first and explain to us what charity you picked, and we'll donate, 10,000 to it after our discussion here. You can tell us a little bit about it, and then we'll have your charity, MadManx, too.
Totally, yeah. So I picked a charity called Footprint Project, and they do something really cool, which is in areas that are affected by large-scale natural disasters and lose power for a significant period of time. They roll up with solar and battery mobile microgrids to power communities.
Wow.
To help them get through these long duration mass outages. The first time I heard about this was during the outages in the New Orleans area. What was that, a year ago now, where basically like all the transmission lines got knocked out. The DER task force was looking to a place to donate to, and I talked to basically all the companies doing emergency power stuff, traditional emergency power included, like diesel generators and stuff. What I found, all the nonprofits. What I found was, you might think to yourself, solar and storage, that sounds worse. You don't care about cleanliness or cost. You just care about like reliable power in that moment. What I learned was that's really cool is actually fuel procurement in these times becomes the biggest constraint on emergency preparedness and response. So much of your effort goes, if you're doing like a 2-week effort to like have some, like health station in a disaster prone area after a hurricane, so much of your man hours go to finding diesel fuel because the supply chain is suddenly experiencing 1,000x demand. Every time you run out, it shuts everything down. These people show up with solar and batteries. It either eliminates their need for fuel or massively reduces it. And it just becomes a huge benefit to the whole disaster relief kind of space. They, as a charity, are also amazing too because they're super lean and scrappy. Like this isn't one of these like super bloated, crazy charities. They're like on the ground doing this stuff. And then lastly, I thought it was relevant because Tesla partners with them. So Tesla sends them solar panels, power packs, at no cost to help deploy these systems. They'll often then set up these systems and leave them in those areas because it's very likely New Orleans or Florida or Texas is going to get another event. So it seemed kind of relevant in that way. So that's footprintproject.org.
Okay.
And yeah, the DER task force, we've last year during that event in New Orleans, I think we raised like 45 grand for them, super vetted. And we really believe in them.
Awesome. All right.
It's got to be great to avoid the loud sound and the noxious fumes of a bunch of diesel generators running as well. I mean, that's another huge benefit, I'd imagine.
Totally. Yeah. Nothing makes a place feel more welcoming than, you know, a stinky loud diesel generator.
Cool. So, MadManx, which charity did you choose, and tell us a little about it if you don't mind? Yeah.
My preferred charity is Tanzania Development Support. I volunteer with them, but they recently built out a girls' dormitory in the Mara region in Tanzania, a school, with a science lab, a library, sort of modern accommodations. Right now, they're really looking for scholarships for some of these girls. You know, it's about $900 a year for one of these girls to get a scholarship. They're the top 5% in their primary school classes, but they just don't have the money to go to school. So, if you start looking at educating women as a climate solution, it's an anti-poverty solution. It's just a nice thing to do. So, you start talking about human capital and the human capital in the world. African women are definitely left behind, and there's definitely some talent there that could contribute to the world. So, I think this contribution would sponsor many girls going to school for a year, and all that money kind of floats around the local area too, which is great because, most people live under $2 a day. So this money going into these communities, they don't have a lot of exports. They don't have a lot of just cash flowing into their communities. So this has got a big multiplier on it.
Great. Yeah, we'll certainly make those donations. And I appreciate shedding light on both those causes. They're both great causes. And I'm, a huge fan of furthering both causes. And so is Matt, I'm sure. And our listeners, hopefully we'll get exposure to them now, and we'll put them in the show notes as well. So yeah, I appreciate you guys coming on. This has been a great chat, and we'll have to do it again maybe in Q1 or after Q1 when we see the financials hit of the first results of the Inflation Reduction Act.
That'd be great. And if you guys want to talk charging, I think that's the real opportunity for Tesla to make money on this stuff is through the charging network, not through virtual power plants. So I would love the opportunity to talk to you guys.
Cool.
Yeah, and I'd highly recommend following both Duncan and MadManx on Twitter. I think it's at Duncan_C. Is that right? And
yeah, confusingly 2 underscores.
Oh, 2 underscores. I didn't notice that. And at MadManx89, we'll put both their Twitter profiles in the description as well. But if you want more insights on energy, because it really is a complicated market, I highly recommend following them. But thank you both so much for your time. I learned a lot, and I think a lot of our viewers will as well. And it was just great to finally have a phone conversation with you. So appreciate it.
Yeah, absolutely. All right, guys. Until next time. Thanks again.
All right. Thanks, guys.
Take care. Thank you.